Hey, what's up, Market Moose? My friend Moose on the loose. I hope you're doing well on this Wednesday. So today I have an offer for you. So what if you could invest your money now and get half of your capital back within the next 12 months? Sounds like a crazy deal, right? 50% distribution yield in your pockets while you are staying invested. So how appealing would it be, right? Especially in this crazy market. I mean, that sounds like a pretty good deal. Well, that is what Arvest MicroStrategy Enhanced High Income Share ETF offers you. So the ticker is MSTE. Sounds like too good to be true. So we're going to take a look at it. So right now the price is at 13 bucks. The distribution, the latest distribution was 55 cents per month. So that means $6.60 at the end of the year for a 51% money back. So that's kind of crazy, right? So let's dig a little bit further. So the love story started in March of 2025. So it's fairly new, just 6 months in. So don't be like, don't stop right now and then go buy for it. We're going to take a look at a little bit more of the history here. When it launched, it was around $15. Then it fluctuates a lot. Went up to 18 bucks, 19 bucks, a couple of times actually since then. But then the problem started to happen when it reached a high value of $18.50 in July, and then started to go down and down and down. And at the moment of recording this show 2 days ago, the ETF was trading now at $13 for a 30 price drop in less than 2 months. So I am on Blossom. It's a social media app about investing. We're really cool. So if you want to look for me, I'm out on the Dividend guy, of course. And I saw a lot of investors that went from that yield and then starting to panic. It's like, oh my God, what's going on? I mean, the stock price is down like 30% in like 2 months. Should I buy more? Should I hold on? Should I sell? A little bit of like everything here. Like, people just don't know what to do anymore. So today we're going to take a look at the covered call ETF. We're going to talk about the distribution, of course, and we're going to talk about total return because that's the most important part. So don't worry about it. I haven't forgot. It's really important to talk about those distribution and the total return. But first, we must know what we invest in, right? That's like key point here. Whenever you are about to put $1 on a stock or an ETF, you must understand what you have. So let's take a look at what MSTE does. So it writes covered calls on MSTR, the company's strategy. All right. And it uses leverage, partially leverage, to benefit, like to enhance the yield on top of that. So already you need to know three things. You need to know what's strategy business model is, MSTR. Like, what do they do? How do they make their money? Like, what's the whole thing? Because the ETF is all about MSTR performance. If MSTR doesn't go well, of course, your covered call ETF is not going to do well. So that's the first thing. The second thing is you must understand what a covered call is, right? I mean, if you don't, well, there you go. You have no clue of what you are actually adding to your portfolio. And finally, you need to know the impact of leverage on this entire strategy. So we're going to unveil all of that right now. Strategy, what it does? Well, it builds a Bitcoin reserve. Basically, it uses leverage to do it. So it issues some debts, some preferred shares, some shares, and then it just builds on buying more Bitcoin. So of course, they do have a side gig, which was a software business, but today it's really like counting whatever you sell in the marketplace in part of your annual income. It's probably not going to move the needle really. So MSTR is going to make money if the Bitcoin goes up. If it stays stable, it's going to be a problem for them for a long run because they have to pay their dividend on preferred shares. They have to pay interest on the debt. And because of that, they must generate growth. But the Bitcoin doesn't generate cash flow. So if it doesn't go up, you have a problem. So now you know how it works. Then writing covered calls. I mean, I'm not going to tell you what covered calls are within 2 minutes. Would be a little bit more, it requires a little bit more time. But at this point, I'm going to take for granted you know that. If don't, go do your research. But to be effective, covered calls needs volume and fluctuation, because volume drives demand. If you have like a lot of volume, you have a lot of demand, chances are people are willing to buy the calls that you're about to write on the stock that you have. And then you need fluctuation, or at least like an uptrend, because what's the point of wanting to buy a call at $100 for a strike price at $100 if you see the stock price going to 95, 90, 80, 75? I mean, why would I pay a premium to buy at 100 when I see it's going down? So you need to have something here. If not, you'll be able to write covered calls, but you're going to make less money. And finally, what's happening with the leverage? Well, it amplifies, right? Leverage is good when you're making money. It's really bad when you're losing money. So all of that to say that everything here relies on Bitcoin. So since July, Bitcoin is slightly down. It went from $119,000 to 111 USD. So guess what happened to MSTR? Well, it suffered, right? And guess what happened to MSTE? Well, it suffered as well. So that's why the overall investment, if you just look at the stock price and you're not talking about total return and distribution, we're going to get there in a second, that's why you're down. Like, and your chance of getting your money back is if Bitcoin goes back up. That's how you should play that and how you should understand it. So now let's go see total return, because that's the most important thing. We don't care about the distribution. We don't care about stock price. We need to have distribution plus stock price to get the total return, because the stock price is scary, but it means nothing if you do not include this juicy yield, right? So total return, starting from March 2025, keep in mind, it's only 6 months, super small amount of months, so you cannot really compare. But still, MSTR is up 8.85%. Doesn't pay dividends, so it's just 8.85% total return. MSTE, including the juicy yield, 7.86. So there's a 1% difference. And a 1% difference is actually 11%. 1% on 8.85, it's 11% of that return that you're not getting in your portfolio because you went for the covered call strategy instead of having MSTR. So that's one thing. Underperformance for 6 months. So big under on performance, but it's only 6 months, doesn't mean much. So let's take a look at the distribution instead, because that was the real goal of buying MSTE in the first place. So it started at 60 cents, then went up at 66 cents for 2 months because Bitcoin was going up. So you're just like, yeah, man, 10% increase. I'm a genius. I'm making so much money. That's amazing. Then it went down to 60 cents for 2 months, and then now at 55 cents. So for the first 6 months, if you have bought it at the launch price, roughly like $15, you got $3.65 per unit, which is pretty good. It's like 24.47. So, I mean, roughly you're on path to get 49% yield at the end of the year if it's analyzed. But now if we keep that, now the distribution is lower at 55 cents, you're still at 46 going forward. So not really a problem, right? You invested in March, you're going to get 46% of your capital back within 12 months. That's kind of crazy. That's great, right? But the question is, will Bitcoin will go back up, or it will be stable, or it will go down? Because if it goes down, the distribution of 55 cents is not going to continue. If it remains stable and hovers around 110, well, the distribution will not continue to increase and will likely go down as well. So your only thing here, your only hope is Bitcoin's going to go back up. And that's just pure math. It's just, I have no clue where Bitcoin will go. So don't ask me. I don't care. I don't mind. I don't know. And if someone knows, I mean, remind them that it was supposed to trade way above like $150,000 like 5 years ago. So we'll see where it goes, right? So all that now depends on the price you paid, your perception of MSTE, right? If you bought it in April, you probably bought it like around like $12 or $13. Hey, that was a good price. You're getting the distribution. You're all good. Good for you on the timing. You're making money, and that's perfect. I mean, that's the whole point of investing is to make perfect. So why did I entitle this podcast as The Dangers of Covered Call ETF? Well, the dangers are within the fact that you may not know what you own and why you own it. If the explanation of MicroStrategy business model comes as a surprise, if the Bitcoin comes as a surprise, if like using covered call ETF, and to see that the distribution is actually now 11% less than the starting point and 17% less than the highest point of the distribution. Don't tell me it's only 17 or 18% like distribution cut. Like when you were working, or if you're working right now and your employer just say, hey, Mike, sorry, but we're going to cut your salary, but it's only 8%. So, I mean, you won't mind, right? I mean, we're still buddies, right? You're going to still come up at the day, come to work tomorrow, and you're going to be smiling, right? Well, you're not. So why would you accept that from a financial institution just telling you, well, yeah, we're just going to cut it off? So you have to be very careful. And this is where the danger is. You need to know the business model of the company that the ETF is writing covered call on. You need to understand the covered call dynamics, and it's not always perfect. And they're not just making money out of like writing covered calls, because literally they failed increasing their distribution. So the math is speaking right now, not me. And you need to understand what leverage could do. So to pay a 50% distribution, the ETF must generate a 50% total return. That's just math once again, because if not, like the stock price is going to drop and you're going to lose money on your investment until it dries really low, or the distribution will be cut and cut and cut and cut. And then one day you may get like 5 cents per unit instead of 55. Well, then I'm not too sure the point of like income investing will be respected, right? So in this case, it will be a mix of MSTR performance, so how MicroStrategy does on the stock market, so pretty much how Bitcoin does, and then several selling covered calls and using leverage to amplify the whole thing. The entire strategy, the entire income, the future of that distribution relies on Bitcoin price. So then I'm going to leave you with this, thinking what you know about Bitcoin, where do you think it's going to go, and then you're going to probably be in a better position to decide if MSTE is a good thing for you, for your portfolio. And I'm not here to tell you what to do. I just wanted to bring a little bit more information on the table so you can make a better decision about this one. So, all right, Moose, that's enough for today. Don't forget, we have a webinar. You can register for free at moosemarkets.com/webinar. That's going to be next week on the 18th. And tomorrow, my friend Nelson from Canadian Dividend Investing is back. We're going to talk about life insurance companies. It's going to be a lot of fun. He has a favorite one that is not part of like the most popular one. So that's kind of interesting. So until then, don't forget to stay invested.